And the only thing we can all agree on is we probably need to look at some new ideas because the old ideas just don't work anymore. And there's no there's no intellectually honest person that would say, yeah, everything I believed in 2019 or 2018, it's all still true. I haven't changed any of my opinions about anything. I mean, everybody's had a place in their life where you know, they've been jarred and stunned, and now they're trying to make sense of it. So the question is, how do we move forward? And to summarize on Bitcoin, I think Bitcoin is it's very volatile. It's getting jerked around. All risk assets are getting jerked around.
Bitcoin, BTC, ran into selling pressure early Wednesday after a top Federal Reserve Fed official said there is no compelling case to halt the liquidity tightening, which would roil risk assets, including cryptocurrencies. I don't really see a compelling reason to pause, Federal Reserve Bank of Cleveland President Loretta Mester told FT in an interview published on Wednesday. I would see more of a compelling case for bringing the rates up and then holding for a while until you get less uncertain about where the economy is going, Mester added. Hello and welcome to Money Talks. In today's video, Michael Saylor, Executive Chairman and co-founder of MicroStrategy, explains how benefits of Bitcoin adoption during the banking crisis and inflation environment and compares it to other investment assets.
Here is what's happened since August 10th, 2020, when we adopted Bitcoin as a treasury reserve asset. Bitcoin is up 65%. MicroStrategy stock, and MicroStrategy's bought almost $4 billion, not quite, but nearly $4 billion of Bitcoin. MicroStrategy stock is up 66%. So we are tracking slightly ahead of Bitcoin. The S&P is up 14%. The NASDAQ is up 4%. Whoa, 4%. All of big tech is up 4%. Gold is down 18%. And, bonds, the ultra safe bonds, long-term bonds, down 18%. Oof. So in terms of asset classes, the crazy volatile Bitcoin is the best performing of all those major assets. And then you can say to yourself, well, I'm just going to invest in stocks. Okay, let's look at big tech. Google's up 37%, Apple's up 32%, Microsoft's up 16%, Amazon is down 22%, Facebook is down 45%, and Netflix is down 52%. Okay. Little MicroStrategy, no one ever heard of, up 66%. Would you have guessed that a mid-sized software company, low growth, mid-sized software company nobody ever heard of, would outperform Google in the last 2 years by a factor of 2? And so last point I make, we compete against companies 100 times as big as us. Oracle, 100 times bigger than us. They're up 25%, IBM's up 3%, Salesforce is down 23%, SAP's down 47%. Okay, so what is the lesson of that? The lesson is we're in the middle of chaos. There is no place to hide. Your choice is you could buy gold, but gold is dead metal and it's just getting ground into the dirt. I realized the half-life of money, the half-life of energy or wealth stored in the currency was 36 to 48 months. So I looked at $500 million and I said, $500 million stored in US dollars at a 15 to 20% monetary inflation rate, divide 20% into 70, right? The rule is 70 and okay, got 3.5 years and half of it's gone. So I think I got to that point, and the significance of that for me, Brian, was I realized at that point that holding 500 million in cash at a 15% monetary inflation rate means that you lose 75 million a year on your balance sheet. And the best I could hope for is 2,000 people working themselves to death, doing 100,000 things right every year, everywhere in the world. And if we didn't screw up anything, and if everybody worked themselves to the bone, we could make 75 million.
Right.
So I had this inflection point where I realized everything we're going to do for the rest of our lives is going to be negated by the inflation on our balance sheet. And that's the point of hope, despair, and indifference, where you're like, it just doesn't matter what we do for the next decade because we can't get ahead. Now, that's a slow death, right? I've used the phrase, right? The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Just a road to serfdom.
Bitcoin, a pure play on the dollar liquidity, fell by nearly 2% to $27,021 after Mester's comments were published. The Fed has raised rates by 500 basis points to 5% since March 2022 to tame inflation. Mester's support for another rate hike and the higher-for-longer stance comes on the heels of hotter-than-expected inflation data and validates the recent hawkish repricing of interest rate expectations in the U.S. official data released last Friday showed that consumer spending in the U.S. increased more than expected in April, even as the Fed's preferred inflation measure. The core PCE rose to 4.4% on a yearly basis in April from 4.2% in March. Per the Fed funds futures, traders no longer expect the Fed to cut rates this year and have fully priced in a 25 basis point rate hike for June. Over the past 7 months, traders consistently hoped that the Fed would pause its rate hikes in the first half of 2023 and resort to liquidity-boosting rate cuts in the second half. That's one of the significant reasons behind Bitcoin's year-to-date gain of over 65%. The cryptocurrency clocked a 10-month high of $31,000 in April. The dollar index dropped by over 12% in the 7 months to April. Mester added that the debt ceiling deal removes a big piece of uncertainty from the U.S. economy.
We still get the same, question, which is, if I have an increment of $10 million of cash flow, do I put it into bonds? Do I put it into gold? Do I buy silver? Do I buy land? Do I buy art? Do I buy Bitcoin? So I still think Bitcoin is the most scarce, most desirable, highest quality property. It's a long-term store of value. So I think generally for us, we've adopted a very simple strategy. We keep enough working capital to last us a year, normally in the range of about $50 million in US dollars. And then when we have excess cash, either from operating income or any other financing opportunity, we put that into our treasury reserve asset. And we have adopted Bitcoin as our primary treasury reserve asset. So we're 100% treasury reserves in Bitcoin. You might decide that you're going to split your treasury reserves 1/3 property, 1/3 art, 1/3 Bitcoin, or 1/3 S&P stocks or something, right? It's a preference for an individual or an investor. But of course, our company, MicroStrategy, has adopted a Bitcoin strategy, and we have transparently communicated that to all of our outside shareholders, and that is in our 10K filing. So when someone buys MicroStrategy stock, they know what they're getting. They don't want us to hedge or juggle 16 different assets. So if I showed up and said, hey, I found it, we can buy a Picasso and I got a good deal on it, we think that's better than Bitcoin, all my shareholders would freak out because they don't want to invest in an art hedge fund or a real estate hedge fund. They want someone that's got a Bitcoin strategy. So from a corporate point of view, it's the right thing for us to do. I personally think it's the highest quality property in the world, and I think it will appreciate the best over time. And as I pointed out to you, it has performed the best in the past 2 years versus every other option. So we've been right over a 2-year time frame. I think we'll be right over a 4, 8, 10-year time frame.
So, is it a good time to invest in Bitcoin, and what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.